Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes confusing world of corporate filings. Today we are looking at a company that might be playing a little too much Super League and not enough attention to their finances. Let's dive in and see what's happening. We're going to break down an important report filed with the Securities and Exchange Commission, or SEC. This report is called an 8K, and companies use it to announce significant events that could affect their investors. In this case, it's a notice about potentially being kicked off the Nasdaq stock exchange. The report is from Super League Enterprise, and the key date to keep in mind is April 7, 2025. That's when they received a warning letter from Nasdaq. So what did the letter say, basically? Nasdaq told Super League that they are not following one of the rules for being listed on their exchange. This rule says a company needs to have a minimum amount of stockholders' equity, which is like the value of the company owned by its shareholders, of at least $2.5 million. Super League reported that their stockholders' equity was only $170,000. That is way below the $500 in your bank account to keep it open, but you only have $170. The notice also indicates that Super League doesn't meet the alternative compliance standards of market value of listed securities, which means the total value of all the company's stock or net income from continuing operations, which means profit from the company's main business. Now, Super League has some time to try and fix this. They have 45 days to submit a plan to Nasdaq, explaining how they will get back on track. If Nasdaq approves their plan, they could get an extension of up to 180 days to show they've met the requirements. If Nasdaq doesn't accept the plan, or if Super League fails to improve their financial situation within the given time, they can request a hearing. This would give them a chance to plead their case to an independent panel. It's important to note that this letter doesn't immediately mean Super League's stock will be removed from Nasdaq. They still have a chance to fight for their spot. Super League says they intend to do everything they can to meet Nasdaq's requirements and stay listed, but there's no guarantee they'll be successful. Now let's step back and look at the bigger picture here. Super League is in trouble with Nasdaq because its stockholders' equity is too low. Stockholders' equity represents the book value of the net assets of a company owned by its shareholders. Think of it this way. Imagine a family wants to buy a house worth $500,000. They have $100,000 in savings and take out a mortgage or loan for the remaining $400,000. In this scenario, the family's equity in the house is their savings, which is $100,000. In this scenario, the family's equity in the house is their savings, which is $100,000. It's the part of the house they truly own outright. If the value of the house drops and becomes less than the mortgage amount, the family would have negative equity. Signed by Clayton Haynes, Chief Financial Officer told so. What does this all mean for Super League? Well, it's a warning sign. It means the company isn't generating enough profit, is carrying too much debt, or its assets aren't worth enough. Whatever the reason, it's a serious issue that needs to be addressed quickly. From this report, we can see that Super League is facing a significant challenge. Their failure to meet the minimum stockholders' equity requirement and alternative compliance standards could lead to delisting from Nasdaq. While they have a chance to regain compliance, the outcome is uncertain. This situation highlights the importance of strong financial management and the risks companies face when they don't meet exchange listing requirements. Looking at Super League, the company's direction seems uncertain. Their inability to maintain the minimum stockholders' equity raises concerns about their financial stability and future prospects. While they are taking steps to address the issue, the outcome remains uncertain, and investors should be aware of the risks involved. Overall, Super League faces significant challenges, and it remains to be seen whether they can overcome them and regain compliance with Nasdaq's listing requirements. It's a company that could go either way right now. It will be interesting to see what happens. Thanks for watching. If you found this helpful, give us a like and subscribe for more corporate deep dives. Let us know in the comments which company you'd like us to decode next.